Despite the recent rally, returns have been sort of lukewarm for Indian equity investors, 10-11% kind of return over a 2-year period, which is a bit subpar. So are you confident that the next couple of years will make up for what has been a fairly pedestrian run for the last 24 months?
And actually, the returns that you've seen in Indian equity markets and in Indian small cap and mid caps have been about one of the best in the world at this point of time in the last 24 months. So while it may appear that the returns have been modest, I would say it is one of the best returns that you've got anywhere in the world. If you look at the future, I would say that we are in a very structurally in a very good shape, and you know that geopolitically we are in a very good shape, and from a macroeconomic point of view also we are in a very good shape. And but the having said that, the challenge is that from a valuation perspective, we are one of the costliest markets in the world, and outside US, I would say we are one of the costliest markets at this point of time. So even going forward, it's tough to believe that you can get very big returns in the long run, in the medium run, I mean. But it is still India is one of the best markets to invest in for the long run, and because it's a very good structural story. But if the valuations were to become more reasonable, I think India would be a great market where you can get both good long-term returns and big long-term returns. Whereas today, because of valuation, it's difficult to predict very high returns at this point.
If you had to guess, and I know it's an impossible question to answer, but over the next 2 to 3 years, which we can classify as medium term, do you think the chances of Indian investors getting 10-11% kind of returns from equity are higher, or 50% plus kind of returns, which is essentially the desirable return for most Indian equity investors?
In late 90s, you could get 16 to 18% in many debt products. So at that point of time, I would say it was necessary for you to get 20% per annum to invest in equity. Today, you're not getting that kind of return. So as long as you get better returns than an alternate asset class, I think it is fairly attractive. And having said that, there are so many geopolitical imponderables which none of us know. And what can hurt markets in the near term? Do we know? The answer is certainly not. Did anyone expect the Ukraine war? The answer is no. Did any of us know that this could be a problem in 2022? The answer is no. So I think we all think that we know what will happen to markets, but periodically certain things happen in markets which we can't predict, and that is the reason why systematic investment plans and asset allocation are the two best ways to invest for most people in the long run.
Speaking of autos, where are we in the auto cycle now, Naren? Because in your funds, you do own names like Maruti and TVS Motors, but autos give returns in fits and starts. I mean, 4 or 5 years, there'll be very anemic kind of returns, and then 4 or 5 years, you'll get a good cycle. Where are we now, you think?
No longer at the start, as an AMC, we did guess that auto was one of the most interesting sectors to invest in. But if you look at the kind of returns some of the auto stocks have delivered in the recent past, we are no longer at the start of an upcycle. We are already in the middle of the upcycle. And now you have to be much more stock specific in many of them because they have actually delivered lot of returns. So you have to do much better work to ensure that you don't make a mistake at this point of time. And unlike a year or two back, when you had seen 5 years of bad returns in auto, now you've seen actually 1 to 2 years of very good returns in auto. Having said that, because the industry is actually going through a metamorphosis because of electric vehicles and all that, there are some companies which are doing extremely well and some companies which are not doing well. And that gives scope for us to do a lot of work as an active asset manager to bet on those companies which is doing much better work, and that gives us a lot of scope for us to do a lot of research and work on them.
What about IT, where there seems to be general pessimism, I would say? Valuations have corrected. Everybody believes that the near terms look very clouded. for IT. Do you sense an opportunity, or have valuations not moderated enough for your liking?
I think it's one of the best contrarian opportunities, but we are grappling with what is the bottom for that contrarian opportunity. Because that contrarian opportunity normally bottoms out when US goes into recession. So, do we believe at some point of time US will go into recession? That's the question we have to ask. We ask most people, they say in the next 6 months to 9 months we'll have it. And at that point of time, maybe the time when you go into that bottom and you can invest aggressively. So till that point of time, a systematic investing into that sector would possibly be the best way forward. And maybe 6 months to 9 months down the line, maybe the best time for you to take a big contrarian investment into that. But the sector has already reached a stage where, as a contrarian, one has to start looking at what would be the best time to invest in the sector.
If you like the video, do like, comment, share and subscribe.